Okay, guys, if you just bear with me for 2 moments. I'm just waiting for Philip to join. Just confirm in the chat that you can hear me okay. That'd be great. Thank you. Guys, if you just bear with me for 2. Hi, Phil, are you there?
I am indeed.
Good stuff. Good stuff. Right, I'm just trying to sort myself out. Can you hear the music or not? I wasn't.
Yeah. Sounds
Can?
good. Nice tunes.
Right, well, I'll turn that off now. But great. Well, thanks a lot for joining everyone today. Obviously, we've got 124 people here so far. So this is the DecenTrader Friday afternoon live stream. A little bit different to usual. What we normally do. Sorry, Phil Swift's here as well, I should have said.
Hi, everyone.
So, yeah, I don't know if you guys know Phil. He's my co-founder of DecenTrader, and he's Positive Crypto on Twitter. But he shouldn't really need any introduction, really, given some of his excellent work that he's done before. But we'll get onto that in a little bit. I can't actually hear you that well, Phil. I don't know if the other guys can or not.
I'll just bring my mic forward. Is that a bit better?
Possibly. Not for sure. Not for me, but I don't know. Maybe I've not got my sound sorted out. Anyhow, so the plan for today, I mean, normally on a Friday, what we do is we go through, well, it's normally like a 3-hour stream or something like that, where we go through like requests from the live chat. Today, I'm going to do it slightly differently. We've got some giveaways for DecenTrader. So we've got 3 different giveaways on the DecenTrader platform. So if you go on the DecenTrader Twitter now and you like and retweet the Black Friday deal, we're giving away 3 memberships to the site for next month. So it's worth going and doing that. We're going to pick those over the course of the day, over the course of this session. But normally, as I say, what we do is we'll have like a 3-hour chilled out session where people just ask us to have a look at some charts. So we'll give a view of what's going on in the market, and then effectively just normally we'll grab a beer and just have a bit of a laugh, really. If there's any trading going on, we've got a 10x account that we're trying to get to 10x, so we normally do some trades on there. But today, I thought, given that this is a public live stream, and some of you will know me for my longer term forecasts and stuff like that, I thought I would just update one of those long-term forecasts and go through it, see if Phil agrees with me or not.
Yeah, I haven't seen it yet, so excited to see it.
Yeah, so we'll have a look, and then yeah, we'll see if Phil agrees with me. Anyway, normally he does, don't you, Phil?
Most of the time.
Most of the time. I'm still struggling to hear. I don't know. Can someone tell me in the chat if they can hear Phil okay? Yeah, they can hear you fine. It must just be
okay, good
stuff. All right. So yeah, just while we're here, we do have an offer on the DecenTrader website today where we've got 30% off the annual plan. Sorry, 30% off the annual plans for both the club and VIP. So I'll explain what that means as we go through. But effectively, normally what we do is we have a look at positions that we're in, or the positions that I'm in. So I've got an account which is attached to Binance, and that account APIs into the site where you can see what position that account is in at the moment. And as you can see, this account is specifically in a US dollar position. It's got a little bit of shitcoins, but not much to speak of. So the reason for that is obviously I'm a little bit unsure about this current bottom. I'll go through that in a little bit more detail with you guys, get Phil's opinion as well. And then, yeah, we'll discuss what I'm looking for to reinvest the money back into a position. So while we're here, I'll just point out as well, we've got the position entry tool, which you can put in effectively your risk and your different asset that you're wanting to go long on or short on. They'll tell you risk reward, and then you can decide whether you're on a spot exchange, a perpetual swap contract, what your account size is, and how much risk you're willing to take, and then it spits out the calculated outcomes of your position. So that's what we're looking at on here. So I'll go through in a minute what my view of the world is at the moment. So that's that. Phil, do you think we should talk about the long-term view or what's going on right now first? I haven't really decided.
I don't know. Maybe people might want to have a look at what's happening right now, given the nature of the current price action. So maybe we dig into that, and then we can have a look at the further stuff out, if that works for you. But I'm easy either way.
Okay, cool. I'm giving away my bloody Zoom things at the top of the screen, isn't it?
It's a nightmare, isn't it? Trying to navigate around that.
Yeah. So this is normally my sort of setup. I quickly go through like what's going in the charts. We'll have a look at Bitcoin at the minute. Today, S&P 500 has been doing reasonably well. I do have a long position on the S&P 500, so I'm still in that position. I am also short on the dollar index, so that's playing out quite nicely. I am long on gold still from the 20-week moving average. I'll talk about gold actually as a separate thing, because it's coming to the 50-week moving average as well, which is like my final buy. And then failing that, then we're not in a bull market anymore. And then crude as well. Futures will I've been long on that for a while, from $40. So we'll have a little chat about that as well. But I suppose the meat of the reason people here, I suppose, is the old Bitcoin and what's occurring. So I've marked out some key levels, which I think are quite important at the moment. Obviously, we've got the 2020 high. We've got the weekly resistance level here at about 18,500. And then a few other really important levels that we're dealing with at the moment actually is we stopped dumping at this diag support here, which has been holding true for some time now. but it was also the 78.6 fib from the bear market. So it has respected and bounced off a Fibonacci level so far. The big question is this going to hold? And I've got some key things that I'm looking out for, which I'll go through in a minute. But the next other levels, which are key here, is we've got a weekly support and resistance level at 15 or 16,000. You'll be able to see that on the chart here. That's this previous high of this week, the close of that of the second week, and then we never really looked back off the base of that starting point on that week. So that's a key level for me there as well. And then finally, we've got the 61.8% retracement of the entire bear market and the 61.8% of the move from 10K. So, i.e., retracement from the top of here back down to the bottom of here, 61.8 of that is about 13,200. And the 61.8 retrace from the 3,000 bottom to the 20,000 top is about 3,600 as well. We also have another important thing there, which is the 20-week moving average, which is coming in strong at 12,300 and has in the past been extremely important in the bull markets. So, what happens next? Well, I think it's quite important. I mentioned in the DecenTrader chat, I've got the Discord on another screen. So I am watching what you guys are saying as well, actually, because you guys are in here, I know as well. And the key things that I've been looking at are, how's the OBV performing? So I've got the consolidated spot Bitcoin OBV, which is a public indicator, which I've got on my trading view. If you want to go and have a, go and favorite that or whatever. What it does is it pulls together all of the volume from all of the spot exchanges that I find to be relevant. And then it uses that volume information to give you a more accurate, less biased to one exchange view of the volume and what the impact is on their price. For those of you who don't know the OBV, what it does is it's the cumulative effect of adding or subtracting volume based on whether or not the candle went up or down. So what it does is if you have if you're going sideways and you have 3 candles that all effectively don't really impact price much, but one of them, let's say, had a big selling volume on it, and the price went down very slightly, what would happen is that the OBV would plot 3 points like this, but it would look like that, whereas price would be relatively flat. What it helps you do is it accentuates where there's a change in volume, where it has not yet been reflected in the price. So, the idea is that volume precedes price. So to me, it's always been a useful tool, and it's even better if you could add all of the volume off all the exchanges, so you don't get like weird scenarios where one exchange is leading over another or something like that. So what I wanted to see was on the 4-hour that the OBV would be putting in bullish divergences. What that would mean is that while price is potentially heading lower, OBV would be heading higher, or at least being flat. What we can actually see at the moment is the exact opposite. OBV is heading lower, and price is actually slightly higher. So to me, that's very bearish at this point. Maybe not what you want to hear. I'm not really here to make you guys feel good. I'm here to tell you what I think is technically fact at the moment. So apologies if you don't like what I'm going to say. But that's tough. So also we've got the Terminator Indicator, and what that it's always a bit of a mouthful that, but effectively what that does is it shows you like the volume momentum. You can see that we were getting bearish divergences, which plot automatically on here, sort of telling us that we needed to be careful. Actually, you can see on the OBV as well, it automatically plots bear divs. You can see it was saying that there was a problem here in the volume. Then also we've got the premium, which you have on the perpetual swaps or derivatives exchanges versus spot price. So that's another indicator I've put together. It's another free one. You can go and get it off my trading view page. So that is telling us at the moment that the derivative contracts are leading price. You can see that there. And actually what we've seen all the way up was the exact opposite, and price was being led by spot currently. And actually really since 16K, it's really not been as led by spot as it had been. Obviously, the demand for the underlying asset being greater than that of the derivatives, where people are speculating on the future price, is preferable than the other vice versa way around to what I just explained, because it's real. You know, it's similar to like real commodities markets. You know, like nobody really cares about the paper market or the derivatives if there's people literally knocking at the door trying to buy gold. You know, that's what matters today. And then the other thing is the linked really to the premium is the funding rate, and the premium on top, which is the yellow bit of the futures contracts. That's also positive as well, but on the way up it had been more negative. So what I wanted to see was OBV putting in a bull div, or at least following price action. It's currently not happening, saying that there's a bit more volume momentum to the downside. The perpetual swaps and the derivatives are leading price. That's not great. Funding's not huge. It's not silly. I mean, if you go back to the previous bull market, this is nothing. But funding and the premium are positive. I wanted those to be effectively starting to look negative. They're not. So my reasons for getting back in the market just aren't there yet. You know, so I have to effectively take a heed to that. My style of trading is that I like to draw a line in the sand, and if I exit a position, when I do that, before I exit the position, I want to know what is going to be the reason that I want to get back in this market. You know, where am I going to be wrong? What's the line in the sand? And they were the reasons. OBV breaking out, or breaking trend, or putting in a bull div. Terminator doing the same, showing the momentum on the volume. It's not doing that. Also, I mentioned Predator. I wanted to see green across multiple timeframes. So Predator is a tool that's an indicator which I've got. I'll talk about it in a little bit more detail. And what I use it as multi-time frame. It's an indicator that quite a lot of people have got now. And what it does is it's a color candled system, and it tells you effectively whether you should be long or short, or whether you should be potentially going into cash. I'll explain it in a bit more detail, but the way that I use it, and I find that's most effective, is to use it cross time frame. Basically, when everything starts turning on green, you know that there's more chance that the price is going to go up. At the moment, we can see on the 15, 30 minutes, we're red. 4 hour we are red, 6 hour red, 12 hour red, 1 day red, which is pretty much the exact opposite to what we have seen previously. The best time frame for this indicator actually though is the 3 day. You know, you can see just from eyeballing it there that obviously it got us long. We were long anyway when we filled down at 10,000.
Yeah, that's right.
10,000. But you know, as all of the indicators started to go green, the 3 days really the daddy. And you can see it sort of got you in here at 10.9 and 9.6. Caught the bottom at 5, got you in here, and then it gets you out, you know, quite successfully as well before the dumps. This, by the way, we've got a discount on the DecenTrader website if you use the code Black Friday for the and the lifetime plan. So if you're interested in it, it's there. It's probably better trader than 99% of people who can't trade, which is, you know, the way that the world is. So if you are looking for something just to keep your head straight, it's not a bad place to start. But the main point here is really. Sorry, go on, Phil.
Sorry, yeah, I was just going to say, what I'd also say is that this doesn't just work on Bitcoin. So I've used it a lot on altcoins. We use it on altcoins a lot in DecenTrader, and it's really effective because obviously what you tend to see with altcoins is that they trend quite viciously in one direction or another. And so the Predator tool tends to absolutely nail some of those big moves. So it's really good for that as well. Yeah,
that's a good point. What it also has is these dynamic stop losses, positions for stops for longs and shorts. So it's not like, you know, you can effectively manage your risk by, you know, say you got into the long here at 10 or 11K or whatever, you would effectively, every 3 days you were moving forwards, you would shift your stop loss with you, and you'd have seen that this would have kept you in all of the way through to 17.6, where you'd have been stopped out, and you would be in cash at the moment. And the way that this works is that if the next candle is green, then you'd re-enter the trade at that point. More conservatively, you'd wait until that candle closed, but what I tend to do in that example is I'll go down back through the time frames and see, is the justification to get back in the trade early or not? And that's probably a slightly more advanced way of using it, but that's where we are at the moment. So this thing still says that life's okay, but we've been stopped out. So it's kind of what happens next. And obviously all of the other time frames are telling you, bloody hell, you need to pay attention here if you're still long, or if you're not long, you need to be waiting for there to be some signals for you to get long. Sorry, I've got this bloody Zoom thing at the top and it makes it a nightmare to switch between tabs. So excuse that. So in terms of like where it goes, I know one of the other things we use on the site actually is Phil and I have developed a KPI report, bit of a hangover from being a corporate guy, finance guy. You like to have your flash or your key information. And on the DecenTrader site, we've got quite a lot of tools, live charts, which is a lot of the work Phil's done. Got some bespoke indicators on here as well. And these are great. We've just added the spent out profit ratio. I'm going to ask you about that in a moment, actually, Phil.
Yep.
And then, so we've got some on-chain indicators here. We have some market cycle indicators. And we've also got useful other stuff like address balances. And this is all great to keep an idea of where is Bitcoin within the cycle, and how much room have we got to maneuver before we go, before we're sort of topping out in the whole life cycle of Bitcoin based on historic stuff. I don't know if you want to reference any of those in particular, Phil, in a minute, but the key.
Yeah, we can have a look at a couple. But yeah, carry on, and I'll just chip in because we'll probably talk about a couple of them maybe when we're looking at the big cycle stuff later on. But right now, in terms of closer in, there's a few things like advanced MVT, which are quite interesting in terms of nearing stuff.
Yeah, I was going to get onto that. So the KPI report is available to our members on the site. And what it effectively does is all of those other indicators are really great, but what the difficulty is, I mean, like you'll know yourself, I mean, all this stuff's fantastic, all those different charts I'd have showed you, but it's difficult to see it all if you're reviewing it from, on a daily basis or something, or, you'd have to go through every bloody chart, and, realistically, that's just not going to be very easy to do. So what we've done is like how far through the cycle are we? Does it still make sense to be in the game as an investor or not? So this doesn't just help traders, really. It's more about like cyclical investors as well. And obviously things are sort of telling us that we're leaving the station a little bit, but we're miles away from the destination that we're going to. So what we're probably going to finish up doing here is having like a clock type thing or a speedometer type thing that will show you overall where are we through the cycle. But at the moment, we do have some short-term indicators as well. And both of these were absolutely maxed out at the top, telling us that we need to be careful. And what we've got there is the advanced NVT, which effectively looks at the market cap valuation of Bitcoin versus the network valuation, or the two things effectively keeping in kilter. And that was way up at 100. And it's now back at 50 since the price has come down. So it's sort of suggesting that based on the activity on the network, the price is a little bit more fairly valued than it was when we were up at 20K. I don't know whether 50 is probably about where you want to be, Phil, isn't it? I would guess on that one.
Probably, yeah. I mean, if you click on the chart for a second, I can just talk through it a little bit. So, and if you zoom in on the more recent data, say 2020 or second half of last year or something, but essentially this, if you double click it, it will reset. So this indicator, it's derived from, if anyone follows Willy Woo, you'll have heard him talk about MVT. After Willy did MVT, someone else then did MVT signal. And then this is an adaptation of MVT signal because of the way the network was used and layer one network was used. MVT signal wasn't as effective as it used to be in terms of picking short-term tops and bottoms. So what we've done is we've adapted it, and it's much more responsive now and being able to tell you in the sort of medium term, so sort of like on weekly timeframes, is Bitcoin getting overheated, or is it actually, you know, a great time to you know, go long again? And the way that we do that is it uses various moving averages when looking at the difference between the market cap of Bitcoin and the value of transactions running through the blockchain. So what that means is basically on this chart, what we're looking for is you've got price line, which is the white line you can see at the top, which looks a bit flattened out because Phil's just zoomed in, but that's the price line. And then at the bottom, you've got the indicator itself, which is the blue line. And what we're looking for is when that blue indicator either dips down into the green dotted lines, which means that's a hell of a great buying opportunity because the market cap has crashed relative to the network activity. So if you go back to, you can see that was the March COVID crash when we just absolutely crashed through those levels at the left-hand side of the chart. And then obviously more recently, you can see in August when we were topping out about 12K, and quite a few other indicators were saying we were struggling to go higher, like funding was flashing a warning signal. You can see we didn't quite hit that dotted red line, but we came very, very close to it and then pulled back down. And then just a few days ago, you can see the latest data there. We were entering that red dotted line, the overbought zone. So that was giving us a pretty strong signal. And we were talking about that in the DecenTrader Discord. And obviously since then, you can see price has crashed and we've pulled back. And so this indicator is now starting to pull back to a bit more of a healthy level. But I wouldn't be surprised if we see in the next couple of weeks price either pull back further or go sideways, which would allow this indicator to probably reset a bit closer towards the dotted green line, which is, you know, would be a really healthy place to be. But it doesn't have to go back down to that green line, but I would expect it to pull back a little bit more from where we are right now over the next couple of weeks, if price either goes sideways or down.
Very good. So the other short-term indicator we've got is the active address sentiment. Actually, just one of the guys just reminded us we are not providing you with financial advice. I know one of the guys in the DecenTrader Discord likes to drink a shot on a Friday afternoon every time I come out with my cliched stuff like that. So, but yeah, it's not a financial advising session. This is just us demonstrating some of our key indicators which we use to try and work out whether or not, like, where we are in the cycle to back up any investment decision making. So yeah, the other thing is the active addresses sentiment. Do you want to just talk about that one, Phil?
Yes, I'll talk about that. So this one is quite similar in a way, but what we're looking at here is the difference between monthly price change. So the extent to which price is moving up or down on a monthly time frame basis versus the extent to which active addresses are growing. So the number of Bitcoin addresses on the network, because obviously active addresses, that if you've got lots and lots of active address growth, then that suggests that the network is growing, which is very healthy for Bitcoin. But what you don't want necessarily is price to be running up at a higher rate than the network itself is growing, if you like. So this indicator is just a useful way of giving us a sense as to whether price is getting a bit overcooked, a bit ahead of itself in the short term relative to that network growth. And it looks really messy when you look at it like that. But what we tend to do is zoom in. So Phil, again, if you can kind of zoom in from around, say, like the March COVID crash sort of time. Yeah, so somewhere around there, just sort of zoom in there. Great. And so obviously what we can see, so if we go back to that example I gave in August, So you can see the orange line is the price change. And when it starts to reach the red dotted line, that's basically saying we're getting a bit overcooked. And obviously we pulled back price wise from there. And then we were seeing throughout the whole of, well, the past few weeks, really, we were seeing that price just raced above that red dotted line. And so we were saying, okay, we need to be a little bit cautious, but we could see on a whole bunch of other indicators that there was actually still plenty of room to the upside. So we were just mindful of this while saying, okay, we think we can go up more. But then obviously, as I mentioned, other indicators over the past week or so started flashing, like advanced MVT, like another one we use, golden ratio multiplier, like some of the things Phil's just shown, like funding and MEX perps rates. And when you start combining those data points, they can start to give you a pretty good picture of what's going on. And what we can see here is that actually, yeah, we did need to pull back, and we can see now this indicates pulling back below that red dotted line. And again, I'd expect that to pull back a bit more over the next couple of weeks.
Cool. Yeah. So we just got a couple of questions there. I've got all of my screens with some sort of something going on, but I am keeping an eye on the YouTube chat best I can. Am I selling my HODL coins? No. I do need to sort of mention that, like, basically what we do at DecenTrader is we trade, like, you know, every opportunity that we can where we have confidence in it on low time frames. And the account that's tracked there is representative of a trading account. I have several trading accounts. Some of them not always doing the same as the others for various different reasons. But what I would say is the HODL coins, or HODL, or whatever you guys say, those ones, I do tend to hedge them sometimes using other methods. But overall, generally, I'm trying to keep those through the cycle best I can. For tax reasons, really, I'd use other methods like hedging to try and mitigate some of that stuff. But if you're not comfortable in that stuff, you need to either do the research to understand how to do stuff like hedging and what that means, and the most effective way to do it. Is it better to just sell the coins, or is it better to hedge? That can come down to tax decisions on your side. Yeah, it's, when I'm talking here, I'm really just talking about the DecenTrader account and what I'm doing with that, really. So yeah, so that's effectively where we are. I mean, I was going to go and dissect it a little bit more as to how it all actually played out when the breakdown happened, because I think it's quite useful to do that. I don't really want to do it now. Obviously, we've got a pretty horrible candle here. We've got a total rejection today. Also, I just needed to point out as well, we've got these high volume nodes, obviously up here, pretty much correlating to each of the consolidations that we had on the way up. And the 20-week moving average is back at 12K. Now, what's going to happen? I don't know what's going to happen. Obviously, we're all just speculators here in this market. This is the breakdown from 20K last time. Now, it may seem wrong to try and consider the previous breakdown from 20K, and you'd have a reasonable point with that because it's a completely different phase of the cycle. However, we have gone up vertically from 10 to 20K, and we did that last time as well. Now, the market tends to behave similarly around certain price points to how it has done in the past. Now, the difference between today and a few years ago is that at that last part of the cycle, people were heavily leveraged across exchanges, and there was a massive deleveraging event occurred. So will it sort of sell off quite like this? Probably not, to be honest, because we're not as heavily leveraged. So I don't think that would happen. I do think it's useful to consider how did the ever so predictable humans decide to play their hand in the previous cycle. And what actually happened was we came down to this level. We bounced from here up to about 18,000, which would be 50% off the top at the moment. And then we continued to dump right back down. And this was just a wick down here, really. But the meat of the move ended at the bear market, what is now the bear market 61.8 retracement, and also current 61.8, and where this big high volume node is around 14K. So am I certain it's going there? No, not at all. I'm not certain about much in this market. What I am certain about is that I will be flexible as the cards are dealt. We'll have to deal with it as it comes along. Am I confident that we're going to bounce back up and go to 30K? No. Do I think we're going to necessarily drop all the way through this floor? No. But I am uncertain to the point where I feel comfortable in cash at the moment. And I've got, as I say, I've got those things which I was talking about, which will make me jump back on the train should that situation present itself. I mean, a breakdown below 15 or 16K, if you like. If we break down below there and then find resistance, similarly to what happened in the past here, well, I think that would be a reasonable short entry for me. It'd be easy to manage your risk off the top here, and the risk to reward would be reasonable at that point. So that might be the short trade that I would look for potentially. It'd be quite a straightforward risk managed trade to the downside, but it depends what you consider short. To some people, being in cash in a bull market is being short. So to some people, I'm already short effectively, but actually I pay myself in dollars effectively. So I am, looking at it as a risk management of the account at the moment. So what else might happen that makes us think that potentially a bounce might happen over the weekend? Well, the VWAP bands. So this is an indicator that you get along if you buy the Predator package, or if you are a VIP on the site, you get access to all of the indicators other than Predator as well. But the VWAP has been great all the way up. So we've got here the blue band being the intraday VWAP, the daily VWAP, the session VWAP, if you like. The yellow line is the weekly VWAP. And what we've seen all the way up is just, I think it's we were well on the case of this, like with DecenTrader from the off, that there was algos which were effectively accumulating spot over during the week off the daily VWAP, and then over the weekend you were getting sell-offs back to the weekly VWAP. It was like they turned off the accumulation algo and then switched it to sell off over the weekend to get you back to what was the value of the previous week price. So for those of you who don't know, I keep forgetting, lots of people don't know, but VWAP is volume weighted average price. The reason why that's important, well, it is what it says on the tin, the volume weighted average price for the day. So the reason why that's useful is, let's say you had 3 transactions that day so far. One of the transactions were like one share for $100, another share for $110, and then some donkey came along and for whatever reason they bought in at an average of $300 for that share. The weighted average price would tell you what was a more reasonable price than looking at it, then coming to the chart and seeing that the price is way up at 300 when there's not been much volume on that. I mean, it would probably be a better example if there was 9 lots of $10 and 1 lot of 30. That's probably a better way of describing it. But the theory is that people want to see value in the transactions that have taken place over that period of time. So there's a natural gravity back towards the VWAP. So that's effectively what we've seen here. And often, when you have like an accumulation situation, you'll see that institutions or savvy, clued up algo investors or traders, they'll just effectively just say, buy me value over the day or sell value over the day. And actually what you can see is that the sell what is value over the day has been in play all of the way down here. So selling the VWAP since the breakdown has been a pot of gold, should you have been doing that. However, the weekly VWAP is obviously very important as well. and that is back up at 18k at the moment. So bounce off the trend here would potentially over the weekend. That would be your target. If I see that this diag breaks out and the OBV looks like it's going to play ball, and all those other things that we talked about, I don't want to repeat them, but if all of that happens, I'll be targeting about 17,800 this weekend for a short long scalp. But however, I will be returning to my Friday position before Monday, which is what I always do over the weekend. So that's really it for now on Bitcoin. I don't know if you've got any other short-term stuff, Phil, but
no, not especially. I mean, I was going to talk about the funding and the MEX perps, which you've covered already. It was looking very similar to, before we broke down, it was looking very similar to how it was in August in terms of funding and that derivatives premium. So yeah, it's just interesting to see how these indicators still work and play out time and time again. But yeah, in the near term, I'm certainly being quite cautious. I can't see us racing back up to new all-time highs in the next couple of weeks, because that would invalidate the golden ratio multiplier, which is an indicator I use. So my thesis in the sort of short term is either sideways or potentially more downside. So we'll have to see.
Have you been following the Brian Armstrong's comments on the regulation stuff? Because I think that's part of the reason we broke down, really.
Yeah, well, it was pretty much the same time, wasn't it? I mean, I don't know exactly, but it was pretty damn close to that announcement coming out. Yeah, I mean, it's pretty big news, that, isn't it?
Yeah. I mean, for those of you who don't know, it basically means that if you're like withdrawing off an exchange to an address, you have to sort of prove the address is yours when you withdraw it, which is obviously not ideal if you're sending to a business, for example, where you pay crypto. Or it wasn't clear to me if you send, like, if I send some money to you, Phil, do I have to do like KYC on you?
I think that was one of the issues. Yeah, is that you have to somehow indicate that it's me who you're sending it to, which can be obviously very problematic. So yeah, I don't know how they intend to do it, but it's certainly a worrying sign. And yeah, if the US start something like that, then often other countries follow as well. So
yeah, well, I mean, it'll play into the hands of like funds like GBTC and into well, the new custodian, what they call it again? I'm having a mind blank. PayPal.
Right. Yes. Yeah. Exactly. So those verified, established kind of third parties. Yeah. Exactly. People will just go, well, it's just easier if I just use those.
Exactly. And then, we may just end up with a fractional reserve system and be away from Bitcoin and what it's meant to be. And it'll be similar to other industries, like the big corps will lobby for whatever works for them. And the knuckleheads in the Federal Reserve will also not like the Bitcoin threat either. So I think the lobbying, it will be very much in favor of the existing big players who pay a lot of tax rather than Coinbase and our little concerns over the problem. So is it a big problem? I don't know. We'll have to see. Hopefully they can see that it doesn't really solve any solution, because obviously I could just take the money. I think the problem is that they don't want the money going off exchanges to like a criminal organization. And if you take the money off the exchange directly to yourself, well, and who's stopping you where you send it then? And I was reading what a guy had said. I think they put this kind of thing in the into the Isle of Man, or they tried to, and then they realized that it doesn't really make any sense, because it doesn't really fix the solution. It just the problem, it just pushes it somewhere else. However, if it is on PayPal, you can't get it out, then it is what it is, isn't it? So anyway, right, so that is Bitcoin at the moment. I'll go through a couple of other charts if other people are around at the end. People probably may or may not be bothered, but this is where I'm going to try and go through what I think is going to happen next cycle. Now, this is never going to be an easy task, because this is Bitcoin, right? But in the past, I'll go through some of the forecasts that I've done. It's basically the similar style to what I've done in the past. And obviously, you know, everyone's using these logarithmic growth curves now. Well, that's what they've called it anyway. But back in the day when I did it, this was basically a really useful tool. Obviously, it helped call the top up here pretty successfully. And I was very aware that once we broke out of this sort of pink parabolic or logarithmic trend, that this point here was critical, and that's where the that's really where the final stage occurred. Obviously, when I did this, we didn't have this data, so it was just a guess as to where the logarithmic stuff was going to go. But this was the basis of the original forecast, which then turned into this once we had the parabola. I can't bloody speak. Which again, like, you know, called the top and then returned to the mean. And then we finally came to this. So after we'd broken down, probably where I was just pressed play to, we were here. So I updated it further. And basically the theory here was we'll break down to 3K and then we will eventually fuck around down here and break out. And the reason I've got A and B there is because my view was that because I mean, obviously the halving effect was the same. You know, it does the same thing to the price as it did previously. It halves the inflationary output of the coins, but the difference is that we know what happened last time. We know what happened before. So the logic I had was that the market might be more efficient. You know, in economics, markets get more efficient with more information, so it might run a bit quicker. However, and it did look that way for a bit, but in the end, we are exactly back to cycle B. So does that still hold true? I mean, I did really think that actually the market had got more efficient. By the way, I will point out that I did call the bottom there on the breakout. Anyway, we did get that runaway early, which I thought was legit and perhaps getting a bit more efficient. However, it was a scam, which took us up there. So came back and respected the logarithmic trend that we were in. So
just so everyone's aware, that was the plus token scam. I'm not sure if everyone does know that, but we now know that it was the plus token scam in China that was driving the price up in 2019 quite artificially, and then they started dumping the coins, and then we had the pullback. So that's why we had that artificial bull run in 2019.
That's right, yeah. And effectively, I think we would have, you know, we had the halving pump, which took us up to like 10 and a bit K. And then obviously we had a bit of a dump prior to COVID. I mean, even at that point, COVID was a risk actually when we were up at 10K. But the breakdown that followed obviously was, you know, all said and all she wrote once oil started to nuke to negative levels. So that takes me to this particular forecast, which is for this cycle. Now, unsurprisingly, I again think the logarithmic trend is going to be really important, since back in the day when I had to draw it by hand, someone's kindly done a proper mathematical way of doing it, which comes with the forecast as well. So no longer does it have to be like my tweaking on a chart as to where I think it might go with the with my sort of eyesight. But so this time, you know, it's obviously we are still trending up higher, and you know the continuation is obviously to the upside, and this stuff's better because it will adjust, I think, as we progress. So the thing's called Bitcoin log growth curves. It's just a free indicator that you can get off TradingView. Anyhow, I've got on there that pink line as well, which I found to be really important back in 2017, and that's the point which I just pointed out, where when we broke that, I mean, you can go back through my charts if you want. I said that this is the point, this is the time now that we're going to go crazy, and I did say that we could go up to 20 to 30K, and I do think that's going to be the same again. This played out as being resistance. I don't know if you noticed that actually, Phil, as well.
No, I didn't actually. Good spot.
So it was resistance in the old cycle as well. I mean, I had it drawn slightly differently, but yeah, then eventually broke out and it became support. Within the logarithmic stuff, that's like the 23.61 fib, probably some derivative of something that you've done as well, Phil. That's why your logarithmic thing comes out there as well, or your fib trend. But what I really wanted to do was try and base. Obviously, I've re-put on that. I do think we're going to go parabolic probably in the next cycle, but this time I've got the benefit of proper maths drawn out, logarithmic stuff to help, and then obviously I've put the parabola in here. Now, the thing that I thought would be quite important is to just look at how, again, similar to how I was saying before, how did the human psyche work here? So last time, we're here now, basically, where we've just corrected off effectively the all-time high. It may as well have been, and we've made that correction. So one of the things we pointed out on the way up was that this was probably going to happen. It's also where Phil's 2-year MA multiplier is sat as well. So we knew that we were going to have a problem at all-time high. The question was, is this some sort of liquidity grab where we go across there and draw people in for a big dump for the sellers? That didn't happen, or hasn't happened yet anyway. Last time we had a China bans Bitcoin event over here. This time we're getting USA bans Bitcoin, ironically. But you know, maybe that's what we need to shake a few weak hands out. So anyway, eventually we did break the all-time high. So once we broke the all-time high, plus about 10%, we had another big sell-off. Now, again, there's reasons why most of this stuff happened on the way up last time. What actually happened here was there was an ETF announcement, and there was sort of like, will it, won't it happen? And everyone sort of pushed the price up loads, and it broke up really high and then dumped from like, what was the price there actually? It dumped from nearly 1400 down to 911 or 888 or something like that. I can't remember what it was, and that all happened like super fast. So you know, as I say, there was an emotional reason why that happened. However, I think that again, at about as we cross the 20k level, I think some people who potentially missed selling here will think, actually, I do quite fancy selling some Bitcoins again. So I think like all-time high plus 10%, probably going to be some sort of reaction there. Beyond that, though, the big sell-offs before the final push came at fib levels. Now, Phil does things slightly differently. You've got your own fib MA multiplier Fibonacci stuff, haven't you? We can have a look at that actually in a moment, see if it would line up. But your stuff doesn't forecast into the future, does it, Phil?
Which stuff are you talking about?
So your multiplier.
Oh, right. Okay. Yeah. Yeah.
That doesn't forecast, does it?
No, it doesn't.
No.
It doesn't. No.
So it needs the new data effectively.
Exactly.
So might be forecasting what your levels are on there actually by using fibs from last time. So that's basically the method. So effectively, the extension from the all-time high top to bottom to the 2.618 took us up to like 3K, which obviously was a nice round number. And then we saw that big pullback. So that's where we broke out of the this key level that I'm talking about here, this trend here. And once we broke out of that, we came back and we retested it. Now the same this time, a 2.618 off the top would be at about $46,000. So it would be this side of 50K, which I think is what would happen. I think, you know, if we start going towards 50K, people are going to start losing their minds about taking profit, I think. So that 2.618 pre 50,000 top, I think will be a similar place that there'd be a big level of profit taking, and a correction there would bring us back down potentially to the about 28,000 to 30,000 level. Should we get up there? Remember, this is not financial advice. If anything, this is just wishful thinking. And then the 4.618 was the next level that we got really high up to. This was this where Roger was selling all his coins? I can't remember now, but this was a really significant sell-off where we effectively went from 5K back to 3. and that shook a lot of people out. You can go back and actually look at the hodl waves chart there. Some people completely shit themselves when it dropped from 5k to 3, and they sold all their coins. So that level was extremely important. Again, a Fibonacci 4.618. This time that would be about 79,000, 70 or 80,000, with the correction actually going right back to the other fib level, which would be about 46,000 or something. So that would be an absolute nosebleed for people. I mean, imagine, now you get yourself all the way up to 80,000 and you watch the thing melt back, thinking it was going to go to 100k, and then you start seeing the thing melt from 100k back to 40k. Some people at that point would just be so convinced the thing's going to go to zero that have already made a load of money if it was at 40, and that's where they all bail out. So I'm expecting something similar around those sorts of levels for the same reasons as last time. And then if we do make a final push and everything does play out like last time, 144,000 would be sort of around the level, somewhere between like 100 and somewhere north of 100, probably between 100 and 150 or something like that. The reason I wouldn't put 100 at the top is because, again, historically what happened in the past actually was that Bitcoin at 10k, everybody was thinking, oh yeah, it's definitely going to stop at 10k, and it didn't. It just completely blew through it. And I think 10k would be similar mentally to 100k last time. That level just wasn't important because the thing had so much momentum. So
I think you also have this time round, you have a lot of hodlers who are just bloody minded in their head saying, I am not selling my Bitcoin under 100k. I've heard a lot of people talk like that. And so I just think, it will be, I think once we are above 100k, that's when you're going to see a lot of coins changing on hands, and you'll see those hodl waves like start moving down rapidly. And then, like you say, there'll be the momentum, so that's probably going to be in the region of a blow off top. Seems to make a lot of sense.
I mean, if you recall last time, what actually happened was nobody was talking about 100k. I mean, 100k was like a decade away or something, wasn't it?
Yeah.
But as soon as we got over 5k, all the newbies who turned up were like screaming for 100 because they wanted to get their 20x. And it would be, I think, similar, because the narrative would shift from, we're going to 100k to we're going to go to 1 million, or we're going to go to
exactly
what I think will actually be the next level, which will be 500. Sorry, go on.
Because once we're up there, the amount of good news around Bitcoin will be insane, won't it? There'll be good news left, right, and center. Everyone's saying, "Oh, it's going to 500,000 this cycle," and then obviously that's when we're approaching peak euphoria, and when you want to be thinking about taking some profit. Not financial advice, but you get the idea.
Yeah. So, I mean, this is just pure guesswork, right? Nobody knows what's going to happen here. It's just pure guess. But what I do know about all of my trading and investing is that if it worked last time, we have to assume it's probably going to work this time. Otherwise, what are you going to do? What are you going to base your forecast on? And amazingly, we are almost like week for week, give or take like a month. We're almost at exactly the same point as we were in the previous cycle, with the exact number of days off the top, which is just ridiculous. And is that luck? Probably not. It's too similar. 378 days there from the top to the top. So we're within, like, I don't know how many days that is, but not far. Should we just check Bitcoin? Actually, I think getting a lot of vibration notifications going off. So obviously we've sold off down to this trend line now. So this is the last point of support here. I mean, if I was trading right now, again, not financial advice, I would potentially think about it, something like this. For a scalp, nice risk reward trade there, potentially for someone. Anyway, not me, because I'm busy doing other things. Unfortunately, it does cost you money sometimes doing all this other stuff, but I do enjoy doing it. I wouldn't want to say that I don't. So anyway, that's kind of like my forecast. And then if you're going to twist my arm and try and Well, actually, along the way, what I would say is that other things that'll be useful is Phil's multiplier, which has proven to be really useful so far. Just to show you that one, it's what do you call it, Phil?
Golden ratio multiplier. That's the one.
You can see there that Phil's golden ratio multiplier like pretty much nailed the top exactly, and that's what happened in the previous cycle. Multiple times. It's similar to this pink line, give or take a few.
Yeah. So it looks a bit messy because we've got two overlapping coloured indicators there. But basically, if you could see the red line last cycle, sort of 2016-17, you can see that price kept on tapping that as really strong resistance. Then we had major pullbacks in the early start of the cycle, and then the latter stage, it was the purple line, and then finally, because of how this indicator works, it was going to be the blue line, which it did. That's where it pretty much topped out. And this cycle, because of how this indicator works, once price hits the purple line, that should be where we top out. So as you can see, those moving averages now are starting to really move up at a steep rate. But in the near term, yeah, we've hit the red line. So we were fairly confident that Bitcoin was getting overheated the past week as we were approaching that red line. And yeah, we're obviously seeing the pullback now.
I'm just thinking, Phil, we may be able to forecast these points forward.
Do you think?
Yeah, I think so.
Well, there's a couple of others as well that help us pick the top. There's like the Pi Cycle top indicator. Willy Woo's got a couple of good ones as well. So yeah, there's I'm definitely going to do a couple of videos at some point on indicators specifically that will help us identify if we're near the top. And obviously when you start getting a few of them lining up, it can give you a bit more confidence.
Exactly, that's it. And that's the key thing really, is what we're looking for. Our framework, well, particularly mine, I don't want to speak for Phil, but I know he does something similar, is effectively, where are we in the full cycle? How bullish do I need to be? How happy am I to hold spot based on where we are in the cycle, based on all of these key metrics, which should still be holding true. If they're not still holding true, then we need to reevaluate the situation. However, if they do still hold true, then we can trade happily within them, but we'll know at certain key points whether or not it's time to start taking the foot off the gas, not wanting to leverage up to the upside, potentially hedging some of that spot. I know that some people prefer to just take profit on leverage on the way up and not sell their spot, and you have to understand what the right thing is for you. But yeah, I suppose beyond that, I don't know what's happened here, but I was thinking, God, if someone's going to ask the question, what about the next cycle? Well, gold's market cap today, actually the other point actually on the way up, sorry, was the 2.618. I've got the where's it gone? One of my other free indicators is this blockchain data indicator, and that allows me to put the actual market cap over the top of the price action. So we've got both price action and market cap. And actually, I'll just point out that we do have an all-time high on the market cap there, and we did break the all-time high. So we didn't in price, but we did with the additional coins that have been printed since the previous all-time high, which is why that's what the delta is, basically, is the new coins issued times by price to get you there. But anyway, so I was looking at the market cap, and effectively for Bitcoin, once it gets to some of these prices up here, the 2.618, Bitcoin will be at 800 billion market cap. By the 4.618 will be at a 1.4 trillion market cap. I mean, the difference between, you can imagine like the acceleration that we'll get when Bitcoin gets to $1 trillion. It'll be absolutely all over the news, and that's the sort of momentum you need to get into the final parabolic stage. In my view, that kind of makes sense to me. I mean, it's a huge amount of money, that 1.4 trillion, and then the top would be like 3 trill, which is insane. I mean, we're like, what's it, 300 billion or something now, but yeah, crazy to think that you could once, that's really what you got to think, like, can we get to a 3 trillion market cap? Maybe. like 10x, so maybe, but it's going to be difficult. You'd need a lot. For that to happen, you'd need a lot of the institutions piling in, and them effectively not selling at all. If it's not institutional led, I don't think we can get there because there's not enough retail guys to pile in. But if we've got a base that's held up by institutions and big blue chips who've invested their balance sheets into the hard asset money, yeah, we might see retail sort of take us there, and then we'll see a big dump on retail off the top. I mean, I don't know how Michael Saylor is going to hold on to his £500 million worth of Bitcoin that he bought at 11k once it's done a 10x.
He seems like a lifer, though, doesn't he? He seems like he's totally embedded with the Maxi community. So I can't see him selling.
Yeah. Well, you have to do that to tell everyone else not to sell the coins, don't they?
That's true. It's quite naive of me to think he was that.
Mate, we're all here we're all saying hodl on for the same reasons, aren't we?
Yeah. You're all going to dump on me, aren't you? Thanks.
Yeah, I am here for the tech, honestly. But it would be nice to make a 10x from here as well, and the rest. But yeah, so Saylor's probably, he's got the same mindset as us, but I'd like to see how he's going to persuade the board and of directors and the shareholders not to sell when his 500 million's 5 billion. I mean, that company only turns its EBITDA is like 10 mil. Sorry, 10 million. It's only making 10 million as a business, and since 10k the thing's gone up, I don't know, 400 million or something in their investment. So yeah, I'd love to be a fly on the wall in their board meeting. Yeah, as I think I joked, I said the board I'd expect the board meeting would go something along the lines of shall we divest this MicroStrategy thing and just buy more Bitcoin with the money?
Yeah, exactly.
So it's interesting, but if we did top out and we did do another cycle, gold's up at would be the target, I think, at that point. At and that would mean we'd need to be at like 570, but that'll be a moving target based on whatever obviously gold's doing. So that's a long way off, and if we get half of this right, I'd be happy. But yeah, gold's that's the real sort of, I'd say it would be inevitability that would take over gold if we get to 100k. What do you think?
Inevitability. Wow.
Inevitability. It's a strong word.
It is very strong. I don't know. I mean, I got to be honest. I don't think about the numbers beyond this cycle too much myself. Yeah. I just can't. It just fries my brain, and yeah, I just find it really hard to forecast that far out. But I'm obviously going to hold some Bitcoin for a very long time, and hope that Michael Saylor doesn't dump on me and crash it all to zero before then. But yeah, I honestly, beyond this cycle, I don't have much of a clue at all. But I like this. I like your approach on the using the log scale.
Yeah, and, I guess it's just trying to forecast sort of what your thing's going to do in advance.
Yeah, exactly. It feels broadly sensible, right? And I think a part of it will be how quick we get up there. But yeah, you know what? I kind of did have a broadly similar number in my head as a zone. I do think we're going to go over 100k this cycle for sure. I don't think we're going to go up as high as like the 300k Citibank forecasts. And yeah, that final blow off stage is so hard to call, right? But yeah, the log scale's sort of indicating that sort of 150k region, and then obviously you can give or take 20, 30k either side of that so easily. Because if you remember, like last cycle in 2018 or to the end of 2017, like we literally spent, what was it, like I think 2 weeks, if that, between 10k and the 20k. So it moves so fast in such a short space of time that it's there's obviously a pretty reasonable margin of error, but I think that kind of ballpark 150k region's sensible in my view.
Good stuff. So I'm just going to catch up on some of the questions here. Actually, I don't know, are you monitoring the chat at all?
Not at
I think
all.
One of the questions actually was, there's lots of stuff coming up actually.
Which one are you in, the Discord or the YouTube?
Trying to look at both, actually. I've got two screens.
I should probably be
I've
doing
got
one.
Norbit on
Sorry.
one screen, Discord on one. I've got YouTube on the other, so I'm standing up as well. So I'm trying.
Do you think I can see there's a question about altcoins? Maybe we could have a quick chat about altcoins in a bit.
Yeah, we'll come on to that in a moment. I think one of the questions there was do people talking about the cycle lengthening. Oh, I just see there's no evidence for the cycle lengthening whatsoever. The cycle, if anything, is going quicker. And as for the reasons I said earlier on, I'd expect it to go quicker. The reason I expect it to go quicker is because the market's more well informed as to what might occur. There's more. That's why we're possibly ahead of the game, and that was the theory why I thought we might be ahead of the game here as well. But broadly speaking, I don't think we've got any other reason to think that it should be any faster or slower. The coins come out at the same rate and get dumped on the market at half the speed that they did previously, and the impact of that's roughly the same. So if you believe in the market cycle, I believe that you have to expect that it's going to be a similar length of time. That's my simple answer with that one, I guess. How long cycle, please? I mean, realistically, the previous cycle ended in December 2017. Based on what I just said, December 2021 would be a similar sort of time, but I mean, we could still top out before that, or we could still top out after that. As I say, this is just a forecast. This isn't gospel. Hopefully it will turn out to be true, but December, Q4 next year or Q1 of 2022 is when I am thinking that we'll be looking at a potential top based on all this stuff. But if someone else like COVID happens, all of this just gets blown up. This is like when Bitcoin's done all of this stuff, the S&P 500 and the world economy and the world climate has just been, plain sailing all the way. And then now we're in this crazy world that we're in. And we may accelerate through this cycle because they print more money. Who knows? Relatively to the dollar, that would increase the value of, well, not the value, but not the real value, but the nominal value of Bitcoin. Right, there's a hell of a lot of stuff there. Let me just have a look here. So we have got, I think we're going to do some winners for the DecenTrader competition. So we have the VIP winner. Sorry, we'll start with the club winners, actually.
Drum roll.
Yeah, here's the club winners. These guys have won a month on DecenTrader. We'll just do it on here so I don't dox myself. The first guy who's won is this crypto frequency guy. So congrats, you have won a month on DecenTrader. I don't know how we're going to announce it, but we'll do it off the, well, I'm doing it now, obviously, but we'll also do it off the actual DecenTrader Twitter as well. So that is one of the winners. We do have another winner as well, which has been picked out. What's this guy called? Tweeting in 5 minutes or something. Who's that? No. I'll click on this link, shall I? There we go. Tweeting in 5 minutes. He's won as well.
Congratulations.
So that's the two guys who've won the club membership to DecenTrader. There he is. Check it out, he says. So those guys have both won. We'll give it a little bit more time for the VIP winner. So all you have to do is go on the DecenTrader page, follow that, and then retweet the tweet. There's only 371. 2 people have already won. So all you've got to do is go and do that now, and then you can win a month's VIP, which is worth $249 on the site. So go and go check that out. Go and do that, and we'll announce a winner in just shortly. So, yeah. So we did bounce off this trend line here.
Very nice. Look at that.
There you go. You guys pumping it?
Yeah.
So that was a question I had earlier. Do we do price action trading? I am a trader, so it is what I do for a living. But yeah, we do price action trading. That is what we do. But like I was trying to say, what the reason why me and Phil are quite a good blend is not only are we both called Phil, we're both from the UK, But like I'm more focused on the price action and what's going on like in the next sort of 5 minutes. And Phil specializes in these big picture tools that are potentially going to be telling us where are we in the cycle. But also Phil, you trade as well, obviously. But
yeah, exactly, and look at alts as well. In DecenTrader, I spend a lot of time looking at altcoins, and I suppose I do also bigger picture stuff with that. Where's money flowing like around the crypto ecosystem, and we've had some pretty good calls in terms of playing DeFi quite well a few months back and all that sort of stuff. So yeah, I look at all that stuff, and then obviously specifics on altcoins as well as the bigger picture stuff on Bitcoin.
yeah, I mean, I scalp Bitcoin. I'm not always just trading exactly the same way, but Bitcoin, if you're going to get really intense into the numbers, I mean, I look at like order flow and all that sort of stuff as well. I was actually going to do a quick session as one of the guys requested me to have a look at order flow. I was going to do that in a moment, a bit more technical. Maybe for the normal guys on YouTube, you'd just be thinking, what on earth are you talking about? But yeah, so order flow. I mean, if you're going to get really into the detail of trading Bitcoin over like day trading, I don't know. It's good to have someone else looking at the altcoins for you, because if you're as intense with it as I am, then there's no chance you're going to be able to do all the research on the other coins as well in too much detail. It's best to work as a team, which is why Decent Traders, we've got a lot of guys in there who've got all of their eyes on what's going on. But anyway, one of the ones I think that's been requested, Phil's Arva.
Okay, yeah.
Actually, I've got a question here. Is it Arva, as in combine Arva? Harvester?
I think it's Ave,
Arva.
as in
Arve.
Ave, as in Ave Maria. If you're
I'm such a boomer when it comes to all this stuff, like. Anyway, so thoughts on this one, Phil?
Bullish. I am bullish on Aave. It's so I really think DeFi majors are going to do well this coming cycle. So kind of going into Q1 next year. I think in the near term, Bitcoin obviously needs to figure out what it's doing, but I am confident we are going to be heading back up and making all-time highs. And I think once we've done that, then I think altcoins look good, and I think DeFi, the stronger DeFi projects are going to do really well. And Aave is one of them. There's a couple of others as well, but yeah, I do like this one. And interestingly, I think on the daily, if memory serves me right, we're just bouncing off the 200-day moving average, which is for altcoins is like just very often a really good moving average to use. It's super useful. If you just use the 200-day moving average, it can often show you when coins bounce. And I think right now we're bouncing off the 200-day moving average.
This is Bitcoin?
Oh yeah, sorry, versus Bitcoin. I forgot you were looking versus USD.
Yeah, no.
There you go.
Yeah.
Purple. So we obviously capitulated below it yesterday, and we're sort of doing like a inverse head and shoulders thing going on. Yeah, I think the project it's just one of these projects that is because of how it works. So it's a lending platform. As the whole space grows, Aave will grow with it. So I think it is going to be a strong contender to just consistently do well this cycle. Certainly versus USD. Obviously, we'll have to see how it performs versus Bitcoin. But right now, you can see it's bounced off the 200-day moving average, which is encouraging. But I think if Bitcoin completely shits the bed over the next couple of weeks, then a lot of altcoins generally will suffer. So just bear that in mind.
Yeah, I think one good thing to point out is this one recovered quite quickly, right? So
yes, yeah, exactly.
If we do go down, I think it's worth going back and having a look at which coins bounce really hard, because the same will probably happen. It's just getting into those ones early will give you a bit of an advantage over the market. And I don't know what the target is for the on the Bitcoin side, but you've probably, I mean, if it really tanked, I could see us going back to this sort of $40 level over here potentially. and that would be a retrace of. That is quite low, actually. No, might not get quite that low, but yeah, I don't want to talk too bearish because we haven't decided that we're bearish or not, right? So if we do turn out to be bullish, this thing will probably outperform. But for where we are right now, if we do continue down on Bitcoin, I think it's worth going and marking out those levels on the chart that you think might be of importance. So for me on the daily chart, clearly there was a lot of resistance here. We'll get some initial resistance at the $40 level, and then we broke out. So I don't know, Phil, you normally use moving averages actually, don't you?
Yeah, use a bit of a mix really. So horizontals, moving averages, fibs as well. But yeah, I mean, I think I'm very confident that Aave is going to be making all-time highs. It's just a question of what's going to happen in the near term, and that is largely dependent on Bitcoin, right? But yeah, so I think if Bitcoin tanks, those areas you're pulling out are entirely possible. So yeah, I'm just broadly advising a bit of caution over the next couple of weeks whilst Bitcoin sorts itself out. But yeah. I do think heading into the new year, lots of these projects, and Aave in particular, will be making all-time highs, certainly versus USD.
Yeah, nice one. In the chat, there is someone, Jim Dudes, just pointed out. Apparently, the word on the street is that you've got a 100% trading track record. Is that true?
Certainly not. Certainly not. I wish it was true. I wish it was true, but
I wish it was true as well.
No, I mean we've made some decent calls in DecenTrader the past few months, but certainly do not have a 100% trading track record.
No, there's nobody. I mean, you might have a 100% trading track record if you make one trade, which is to buy Bitcoin and sell it at some point in the future. Yeah. I'd guess that's probably the only sort of circumstances. You're not really a trader if you've got a 100% track record. You can't always be right. However, that's what people want to believe, Phil.
Oh well, yeah, let them believe it. I don't mind that, but no, I mean what we try and do is try and obviously understand, like I said earlier, where's the money flowing, and if you kind of get your head around that and have a broad strategy, then you can more often than not get the general directions right. But certainly when it comes to trading lower time frames, my track record is probably as good as most of the decent traders. No pun intended.
Yeah, there's a lot of puns going on there. I wasn't going to pick up on them too much, but yeah, I don't know who you've been listening to, not hearing that I've got a 100% track record. Like, yeah, need to go and have a word. Anyway, we need to work on our propaganda on my side.
I'm concerned that I'm classed as the other Phil, by the way. What does that you say? You're the main Phil and I'm just the other Phil. If we're
going to get into it's like Ant and Dec, like your deck. Anyway,
enough about us. That's boring for everyone.
Sorry, we're just going off piste a little bit. So I think it's probably a good idea to have a quick look at. Actually, I will do some fib extensions on here, so you can see actually. So firstly, the VPVR does say like this is there was a big gap up between $40 and $50. There's not a huge amount there. We did see good support, obviously, like a nice big hammer candle back up to that moving average, which is where we've been rejected. So it is important, I'd say, for it to get over this $60 level pretty quick, sharp, and start turning that into support. I mean, I tend to, in a situation like this, I'd want to see us start dancing above this hammer here, and starting to sort of really, show some strength in amongst all of this volume. But at the moment, it's you could argue that it's being rejected actually, alongside Bitcoin, obviously. So certainly versus the dollar, this is a key point here, really. For me to get back into this one, I want to see us get over here. We'll see some strength through there, along with everything else sort of generally going to the upside. But yeah, we've got this big void here, which again you can see that if that does fall through the 50 to 40 level, a lot of volume history there. So it would make sense to bounce there for me. So this is one of the things where I would put alarms on, these 3 lines probably as alerts for what's going on in the market for me. So that's Aave. Ethereum. Talk about that. So Ethereum, I mean, I've been talking about Ethereum breaking over 400 quite a while ago, on even on Twitter as well. So we will take the credit for that one ultimately breaking out. I mean, the key thing here was when we broke out of this enormous, gigantic W, which had another W within it, OBV. I have got an Ethereum consolidated OBV as well, which is obviously does the same as the Bitcoin one, but for the Ethereum price. And we had a huge bullish divergence on F versus price action, where we effectively broke out of the trend on OBV like light years before really all of this stuff started to happen. I mean, you can see it on the daily as well. It was way ahead of the price action. Once it loads, it takes a little while to bring all of this data up, but yeah, the price was just, volume and price action saying that there was accumulation going on here. So eventually we did break out and reach the target, which I was looking at up at sort of 550-ish or whatever. Yeah, I think I took the rest of my profit at about 588 before we dumped back down. So we have come back down to an interesting level here, which is the previous highs, and bounced. So it looks okay for now, but again, like, if Bitcoin continues its downtrend, I'll be looking back at this this trend line here for some sort of support. And I think it would make sense to me, worst case scenario, I think if Bitcoin does go down to 13 or something like that, which is unlikely at this stage, but if that were to happen, personally, I think the round number of 400, 420 would probably be an interesting place for picking up some more Ethereum, in my view. Have a quick look. Yeah, so 420, 430, that's where the 61.8 golden pocket is. If we continue down, that would be like a great buy the dip opportunity for me in there, should it come. That's my view. But anyway, I don't know if you've got any thoughts, Phil.
Sorry, I was just looking at the chat in the Discord there, so I haven't been following.
It's all right. Well, I'm sure you'd have agreed anyway. What's going on in the chat? Is there any questions or anything?
Generally calling us like Batman and Robin and stuff like
Really?
that, which is
obviously Dumb and Dumber. Like.
Yeah, Dumb and Dumber, exactly. A couple of requests for other altcoins to look at. So Link is one of them.
Yeah, we'll stick to the majors if we can, otherwise we'll be on all day.
Yeah, actually, one I did want to share is Yearn, if you want to have a look at that quickly. Obviously, it's a bit of a favorite of mine. And there's been some interesting price action on it the past couple of days. So if you go to, I like to use the 4 hour and the 128 moving average.
Mm-hmm.
Cool. Yeah. So exactly what you can see there is how. So for people who aren't in DecenTrader, we really like Yearn. It's very volatile, so very nice to trade. And we rode it all the way up in July, August time. And then there's some very clear indications for us when it got bearish, when it started its downtrend. One of those was when, you can't see it so well here on the Bitcoin chart, but it's fine, keep the Bitcoin chart, Phil. But certainly versus USD, all the way up, price kept on tapping, pulling back to the 128 period moving average on the 4 hour, which is about the same as the 20-day moving average, and then would rebound very strong. It then fell down sort of in early September time below it, couldn't reclaim it. And that confirmed to us that we were in the downtrend. So we sat on our hands all the way down to the capitulation bottom, which I did trade. And as decent traders know, we knife caught that bottom very nicely. And then what we've seen and been talking about is how it was able to reclaim that 128 period moving average on the 4-hour. And then we just saw yesterday how it retested it, and then we saw price just bounce really hard off it again, which for me is a really bullish sign. It's encouraging. Still green for the moment on Predator, but obviously it is going to be influenced to some extent as to whether Bitcoin dumps hard again. So just be aware of that. But for now, Yearn is looking good, and I do think it's going to do well this coming cycle.
Yeah, I agree. I think it's trading pretty similar to Ethereum back in the old cycle.
Oh, right, okay.
Yeah, I think like it's just textbook, isn't it? It's like, you know, there's not really any institutions messing around with this thing, so it's like proper, you know, extension,
exactly,
like triangles.
Yeah, and Predator's been great to use on it.
Yeah,
well.
you can see we've got Predator overlaid here, and just been great at telling you when to get back into the trade, when to get out, when to get back in again, when to short it. Yeah, it doesn't really require much explanation. I think an ape could probably use Predator, to be honest, with Wi-Fi and make money. So, yeah, it's been that has been a good one. What's your price targets on this one, Phil? Any?
I did. I mean, I've already said something that some people are already holding me to. I think we could go up to, you know what? I think price targets from a main cycle level are so hard to do on alts.
Yeah.
Like Bitcoin, we've obviously just gone through, and we have loads of tools to help us do it. It's just so much harder on alts because they're all individually so volatile. But I would expect if we put in another good cycle in Q1, I could see Yearn going up to 6 BTC, and that's something I've said previously. So I guess I've got to hold myself to it. I think you know, it reaches a key fib level if you do a fib retracement from the high to the low, and it's around 6 BTC. So who knows though? I mean, we could go way higher than that. It depends how crazy this alt cycle gets.
Yeah, because I mean, a six would be less than 6x off here, and we're sort of calling for like, yeah, well, it's about what the same as actually what 6x is from Bitcoin, isn't it? From here actually to the top, so not hugely dissimilar.
Yeah.
In terms of
it'd be like from that low we've had there in just a couple of weeks ago.
Yeah,
that would be like a sort of
where it would be more than that, 10x,
like a 12x. So 12x. You know, it's versus Bitcoin. That's not too shabby. So yeah, I mean, perhaps it runs and does another 2x from there. It's so hard to call like from this point. We'll just have to see how sentiment is shaping up when we get closer to there, if we get closer to there. But certainly, you know, certainly going to be making new highs in USD terms. Probably not too far away right now.
Not financial advice.
Not financial advice, just my opinion. Thank you, Phil. But yeah, I think it's another project that has potential to do well this cycle.
Yeah, cool. I mean, the key level, I think this thing, as I say, is probably going to trade quite, it's probably going to respect these levels, I think, quite nicely on the way back up, you'd expect. So, I mean, you can see it sort of topped out here where it found previous resistance on the way down. So, I think on the way back up, the key levels are, well, unsurprisingly, 2 Bitcoins, 3 Bitcoins, and 4. So, not the most unsurprising levels. Humans are very basic animals, and you can see they were the key levels on the way up where we found support and resistance. So I'd expect on the way back up that you should just be able to look here and see where the obvious levels are to trade it up to.
Just really like, yeah, like it's kind of like if you're starting out in alts, or if I was starting out in alts, I'd be really pleased to come across Yearn because it respects levels so cleanly. It's really clearly volatile. So when it picks a direction, it really goes for it. So if you do have trending tools like Predator, it's like super easy. So yeah, I have enjoyed trading this one the past few months. It's really
always nice when you make money, eh? And it's just really super trending, which is great. I did actually hear somebody on Twitter was sort of making the argument that whereas Bitcoin in this cycle has made higher highs, the DeFi stuff's made lower highs on the way back up, so it's more bearish as a result. What's your thoughts on that?
Well, no, I don't buy that, because they were massively outperforming Bitcoin when they started out in August and July and August. So
Yeah.
they massively outperformed it then, and then they pulled back hard. Yeah, it's just classic altcoins, right? They are super volatile, so they outperform on the way up and they massively outperform on the way down as well.
Yeah.
And you're just seeing that compressed with DeFi because it's so, I say, new in inverted commas, in terms, because that some of them have been around for a good couple of years now, but new in terms of being a sector of the altcoin market that's getting a lot of attention now. It was really from July that they came on the scene, and so yeah, you've just seen that extreme volatility play out both to the upside and to the downside. So I think I think you will see them outperform to the upside at some point next year, but not just yet. Although, having said that, the bounce the past few weeks, some of the DeFi majors have bounced really hard. So certainly outperformed Bitcoin, as you can see there, when Predator turned green from the start of November.
Very good. Shall we take a look at link, perhaps?
Yeah, I saw someone requested that. Yeah.
Should we just check in on Bitcoin, actually? Yeah. Be rude not to,
Let's
really.
have a quick check. What's happening?
So it looks like we have bounced. So we have had a bounce.
Your trade's just played out within 20 minutes. The 280
yeah.
people who are on the YouTube all went long.
yeah, that's the cost of doing the occasional YouTube. But yeah, you can see obviously we're flagging up against this. I don't know where this trend line's come from. Just let me have a quick look. Oh, I think I've gone off log, haven't I? That's change. Yeah, nice bounce there. Not quite engulfing the previous candle. I think that's really what you'd want to see, is a bit more of a bounce, actually. What you're probably going to see here is, I mean, on Friday afternoons, what you typically see is there's like a risk-off environment. Actually, if we've got quarterly, I think we've got futures expiring today as well. So, yeah, Bitcoin on really super low time frame, just trying to do some sort of flag here, I think, to sending triangle to break up. But yeah, it's come hard against previous support here, which turned resistance once it broke down here. So not super bullish at all. Let's have a look where the VWAP's up to. Yeah, so I was saying if we do pump up, we might see it to 16,900 and see what happens there. But the weekend's coming, so who knows? Might wake up in the morning to a big green one like that. Who knows? It could also, as I said before, if we lose that level there, I'll be looking to short with my risk against this fib level here. So still very much in, you're either scalping or you already bought support, or you're looking for a short entry. Or you're in cash, is my view of it. So let's have a look at Link. Actually, should we announce, have we got a winner yet on the VIP monthly? We'll have a look at that before or after.
Are you asking me?
Not really, I'm just speaking to myself.
All right.
Let's have a quick look. Norbert's inbox me with the winner, the VIP. And
here we go.
The winner is, I can't say that. Cohen van der Berg has won the VIP.
Nice one.
So congrats. There you go. We're doing an epic giveaway. So it helps if you butter us up a little bit, maybe, to win. But yeah, so congrats, mate. you shall be in the winner. Apparently, Albie Baggins, who's in the chat, is willing to do sexual favors. So maybe send me a DM later and confirm your gender. Anyway, I know that one of the guys in the chat is some of the members are quite keen for Albie to join. I think Comanche Scalper's a little bit. He'd probably eat you for breakfast, him and Jim. So there
Watch
you
out,
go.
Albie. Watch out.
Shout out to Albie, yeah, so mate. Right. Anyway, so back to the sensible stuff. Oh, shit. I just stopped sharing.
Yes.
Right. Somebody needs to do something about this Zoom drop-down thing from the top. Horrendous.
Yeah.
Right. So quickly, we'll do link. USD. Let's have a look at it in USD. That's the one I'm more familiar with.
Yeah, you can take it away with USD, and I can just say what's happened on Bitcoin versus Bitcoin.
Yeah, so it's not one I've looked at a minute. So I picked up link back at 770 down here, which was roughly the 61.8 of this on the log. Yeah, it's roughly 61.8 of this move that we had off the March lows. So I've got a bag of link which I'm willing to add to. And these are the key levels that we were looking at around. I mean, my 1240 level was where I took most of my profit, and then I just kept the rest of the bag. But we obviously went all the way up to 16 and then completely came back. There it is, to the 128 moving average there. Phil. Literally bounced straight off it at the $13 level. So again, this 128 moving average has been really important. You look at it on the 4 hour though, Phil, don't you?
No, I mean, it's normally used for Bitcoin on the daily. So 128-day moving average is for Bitcoin, and last cycle it picked a lot of the lows. So that's kind of where it comes from. But I've noticed that people are using it on different time frames for some of the alts, which is what I picked up on Yearn. So that's the only time. But no, typically I use it on the daily.
Yeah, cool. So it has proven to be pretty useful on the way up. But once we broke out of this level here, which was like this $13 level, I really wanted to see that act as support actually on the way back down. So it's kind of trapped now between what was previous resistance, should have turned support, didn't, did find it slightly lower down. I mean, this thing really was a channel to the upside, just kept going. Rather than looking too much to the horizontal once it just broke out of there and found support. We were talking, weren't we, that once it pushed up and put this candle in, that to look for a retest of the breakout, which is what happened. So that would have been the entry point there with a nice risk managed entry. And then obviously it ran up to this level, which I haven't just put on the chart now, as you've seen. It's been there for a while, so $16. Again, all of this stuff, everyone's looking at it the same way. It's previous weekly. I mean, look at that. It's almost directly off the top of this previous breakdown candle. So the next levels are going to be 1880, and the all-time high will be resistance. So, it's another one of those things, like if Bitcoin's going to continue up, what we know is that versus dollars, this thing's going to probably continue up. If Bitcoin's going to go down, expect this thing to go down. Know where your levels are. If Bitcoin loses that 13 level, then we might be finding ourselves back at like 10, or maybe it's as low as 9 or something like that. However, upside target again. So if I could see the argument, at this 128 to be long, if you think Bitcoin's going to hold its bottom. And again, you could potentially look with your lows. I would use a loose stop. I'd want to see price action around the low here, but there might be another trade back to the high up at 16. It's a 5-to-1 risk reward, and then a little bit higher, perhaps if you kept some of the trade up nearly an 8. But failing, I mean, I'd prefer to do that sort of trade from down here, really, in an ideal world, where it would be a much much better trade. So I'm a little bit biased. I'd rather that we come back down, and I can scoop everything up for cheap. At the moment, we can have a look at what's occurring on the Bitcoin version, the link chart.
Similar-ish story actually. So versus Bitcoin, on a log scale, it's been in a channel, upward channel on log scale for ages, and it just came back and tapped the bottom of that channel. Really, you could draw, right, you can see way back at the start of your chart there, Phil, you could draw a channel running up the base of the chart, and it's basically tapped the bottom of that channel sort of today. If you go back, yeah, exactly. And I think, I'm expecting us to at least sort of bounce there, but depends a lot on what Bitcoin's going to do. Slightly worrying is that it lost the 200-day moving average. So it tried to reclaim it, and the 200-day moving average and the 200 EMA as well, exponential moving average. Either of those have basically, if you look at either of those, you can see there, Link likes to come back and tap it before moving up again. And more recently, it's got quite messy. You can see it's been trying to reclaim it and failed a couple of times, which is a bit worrying, but we have come back to the bottom of the channel. So yeah, stuck between a rock and a hard place really at the moment there in that sense. Failed to reclaim the 200-day moving average, but is at the bottom of the channel. So we're just going to have to wait and see if that how that plays out. If you wanted to play it really safe, I'd say, well, not financial advice, but if I was to play it really safe, I'd wait to see Link reclaim that 200-day moving average. If it can, then a lot more confidence for the medium term. A riskier play would to sort of take a trade on it bouncing right now off that lower level that Phil's just moving there.
Yeah, I mean, if your view is that Bitcoin's going up from here, then you could feel more confident to be in these trades right now, I guess. So that's
the long and short of it. Yeah, exactly.
Yeah. I mean, it did lose the 200 a couple of times down here for a bit.
Yeah.
So, but it does make sense. Once it turns into support on the daily, it does tend to be a goer from there.
Exactly. So that's a higher conviction play, I think. If you wanted to wait for that reclaim, that would be quite a high conviction play.
I mean, it's problematic if it falls over here because it loses this trend, doesn't it, to the upside? We don't really know what that means, really. So, yeah, it's definitely one to watch actually versus Bitcoin. I hadn't really been paying too much attention to the versus BTC chart, but yeah, if it does come down, 55,000 sat looks like a good level at the moment to keep an eye on. Previous resistance up here, I don't know what that would equate to in dollar value, but obviously it depends where Bitcoin is. So yeah, so that's, I guess, our view of Link. So I think, how long have we been going?
We're coming up to a couple of hours, I think.
Yeah. So I don't want this thing to go on forever and ever. So we've pulled out the the three winners of the competition. So thanks for entering that, guys. Probably do that again sometime soon. Maybe for Christmas or something. Do another giveaway. I mean, I know one of the guys in the DecenTrader group wanted to discuss what happened to how did we see the fall down, or how did this actual breakdown play out on the other day. So some of the key things that were notable for Bitcoin is that we lost. This here is the trader platform. What it does is one of the indicators on there, it shows you the ratio within certain distances from price. Looking at the order book, what is the ratio between the bid and the ask? So when you find that there's more bidders in that band away from price than there are sellers, it gives you like a green box. And when it's neutral and there's nothing, there's nothing there. But what we knew all the way up here was that effectively Bitcoin was, and this is across, this looks at both spot and swap contracts or derivatives. We knew all of the way up that the bid, I was calling it Bitcoin, because it was just getting bid all of the way up by the spot action. Actually, you can see here, if you take it off being both spot and perpetual, if you just look at spot, you can see that it was really driven up by the spot market. But once we got to the top, there was just like layers and layers and layers of sellers. And, all it needs is a little bit of a push to send you down at that point. So the spot buyers have come back to the market. So this was one of the warning signs, was the depth of the dominance on the ask side to the bid on the spot exchanges, given that spot had been leading price all the way up. And now obviously it has returned in favor of the bulls. This is a good bullish indicator that the bottom could be in potentially. So anyway, the point is, this was showing us problems here that were not previously here on the bid side. So the bid has sort of lost their dominance at that point. There was that, but order flow, I'm not going to go through order flow here. It's quite an extensive subject for a live YouTube. We'll do it again with the new guys who've just joined DecenTrader, but I use this platform ExoCharts to look at order flow. One of the things on here is the open interest. Open interest is effectively the sum of the open contracts on the exchange. So we had this swing failure pattern up here. Actually, when you buy Predator or you're a VIP, we've got a swing failure pattern indicator as well. And that would have told you that we had a swing failure up here on the 4 hour, quite an important one. I thought actually that we might bounce here, which we did, and then we came down. Now the risk was, as I'd been saying to all the guys on DecenTrader that night, that they needed to pay attention to the fact that when we were up at this swing failure up here, all of the day, throughout all of this, what we saw was open interest was increasing at the top here all through the day, and it increased as price fell. Now, if open interest is increasing, what it means is that you've got new longs and you've got new shorts entering the market, new positions opening, more open interest. Now, when you have a situation where open interest's increasing in the direction or the momentum of the market, what that means is that here you've got both longs and shorts opening. Now, who's going to win that battle? It's the way that the momentum's going is who normally wins it. So if there's a new open interest and the price is going down, the sellers are dominating over the buyers in that instance. I'm not going to go into delta and CVD and all that sort of stuff. Actually, I'm just going to take that off altogether because it'll just confuse people. But what we can see quite clearly is that open interest was increasing all the way through here. Now, if open interest was increasing, you can see people were taking profit here. Open interest increased through here. That was actually quite bullish. Could be interpreted as bullish. It then went sideways. That's fine. And then we had the massive increase in open interest here. People took some profit. You can see there's probably some liquidations as well, actually. And everything was sort of okay, but then we had the swing failure pattern, and then open interest continued to increase. The people started increasing their new long positions here, and there was new short positions, but price was coming down. And I was referring to it in the chat as like it was like a loaded gun, because this thing resolves. Open interest doesn't just go up and up and up and up and up, because what it means is that both sides of the long and short equation are being more highly leveraged. So what we saw then was there's going to be a blow off in some direction or the other, where there's like a liquidation event, or perhaps everyone closes all of their positions in a really nice orderly fashion, which isn't typically what happens. So open interest massively increased, and then as soon as we started coming down here, you could see actually open interest was still increasing, and then all of a sudden it just gave in, and then you had effectively massive drop in all of the longs closing out their positions as this came down. I like to look at that as that once you've got that, we've come back to sort of a similar open interest level over here. So the market had kind of reset to how it was feeling through all of this up here. But obviously there's still a lot of longs were long, there's still all these other longs here, which were at risk of being taken out. Now, where are all those guys going to have all of their stops, do you think, who went long here? Well, they're going to be probably against these lows, aren't they? So, if they didn't get taken out there, when the price came back up here, well, they were going to be like, bloody hell, get me out. I'd still be in profit if I get out now. So a lot of those guys then, this was actually where the VWAP was as well. A lot of guys took their profit there, and then all of a sudden, there was another run to the downside. And then we started stabilizing, which is kind of what this is what you'd expect to see in the bottom. Actually, what always happens as well is that we'd put in a temporary bottom at about 8:30. You can see on the bottom of the chart there. And then USA don't wake up until like 1:12, 1-ish. And then I was saying to the guys in the chat that there's absolutely no way that the United States are going to let us have our bottom without them being part of the party. Partly due to just, the guys wanting to potentially run the lows here, gather some liquidity and pump it. But also, just naturally, I think the market will have wanted to go back down and retest that low during open trading hours. Just psychologically wise, it made sense. So here we've got a little bit of a bottom and potentially a triple bottom situation here. This really needs to start breaking out of here. But anyway, we've talked about that stuff. The reason why I'm showing you this is because open interest was key. We had a loaded gun, as I say, when everybody was trying to get long here. Open interest was just flying up, and then boom, market resets and all that gets washed out. So that's my chat on flow for now. I mean, there was a few other bits and pieces. If you go and look at the delta, once we started getting it up here, we were seeing that CVD was showing that the market was being absorbed by sellers as opposed to buyers, which is what you kind of expect to see after a swing failure pattern like that. I didn't trade this as well as I could have done. I fell asleep. I've been over trading basically. Like I've been trading like 20 hours for all of this bloody run up every day. I fell asleep like here. So I didn't get out of all of the positions I wanted to do as quickly as I did, but some of them I had stop losses on, which just split my perps accounts negative. So it worked out reasonably well anyway on some of the accounts. So yeah, overall order flow interesting, probably slightly more advanced for newbies. You'd want to stick to just horizontal support and resistance and trending and moving averages and that sort of thing. I'd recommend before trying to get into the detail. So that is that really. So just, I mean, unless you've got anything else, Phil, I'll just sort of wrap it up.
No, I think let's wrap up. It's been a couple of hours. Good session. Good.
Yeah. So just as a reminder, we have got the Black Friday offer on DecenTrader. If joining DecenTrader is a good idea for you, both to learn how to trade, see what we're up to, chat with the guys, get some of our indicators and tools, follow our positions, ask us any stupid questions, which aren't stupid, but sometimes you do get them actually off the likes of Comanche. I'm only joking, mate. Yeah, so go and have a look at what it is that we offer and the different offering is what you get with what package and stuff like that. So if you find any of that use, go and have a look. But we do have some free live charts on there as well. If nothing else, you can come and revert back to those and check out what's up. So that's it really. So thanks a lot for joining. Obviously, this is the first live stream we've done on YouTube, so I hope you found it of some use. Follow us on Twitter as well. So mine's at filbfilb, and Phil's is at Positive Crypto. And then yeah, other than that, hopefully we'll see you in the DecenTrader chat. If not, then we'll be on YouTube and all that sort of stuff. Keep an eye out. Follow this channel. Follow DecenTrader on all of that stuff. Like and subscribe and all that. I'm not a YouTuber. I'm a a trader, so I forget to say all of the stuff you meant to say. But yeah, make sure you like and subscribe. Otherwise, thanks a lot, guys, for joining. That was I quite enjoyed that, so I hope Phil did as well, and you guys got something out of it.
Cheers, guys. Thanks a
For
lot.
now. Bye for now.
See you.